This is Will McCauley with cEntellect. I'm going to review this week's crude oil market highlights. We remain bearish for the fourth consecutive week. Our price target is between $62 and $65 a barrel. Crude is currently trading around $63 a barrel, so it's right in the middle of our range. We're going to continue to reassess and decide if we remain bearish or take a neutral position given the recent fall in crude prices. We remain bearish on 6 main factors that I'll walk through now. First is the United States dollar, which is up 7.9% over the last 28 weeks. For every 1% increase in the US dollar, you should expect a decline of about $2.75 a barrel. So as the dollar continues to appreciate, we continue to expect declines in crude pricing. The second is we just finished the 5th week of the normal build season. The 5-week average is 6 million barrels a week of build versus a 5-year average for the same weeks of about 2.1 million barrels a week. So we're injecting about 4 million barrels per week more than the 5-year average. Again, truly a bearish signal on the demand side. U.S. demand last week was also down about 100,000 barrels a day, which is about 0.8%, while production was up 300,000 barrels or 2.8% week on week. So again, those two things tell you supply is outstripping demand in the near term. The 5th factor is lease to commercial stocks. We're up 2.2 million barrels a week on week. And then the final thing is we continue to see draws from the Strategic Petroleum Reserve of about 400,000 barrels a week last week. Next, I want to look at see how our trade has done. We are up 12.3% since we initiated the trade, and that's on an unlevered basis. Again, you can see with the recent decline in crude, our bearish position has profited. Again, we are going to reassess this and decide where we go next week. One final point on crude oil markets is the Iranian sanctions are scheduled to go in place early next week. We're already hearing rumors that India and South Korea are successfully lobbying for waivers. In the event those waivers are granted and other countries either request or get waivers, we expect the oversupplied situation in the market to simply exacerbate. So no waivers, we're still bearish. If waivers are granted, we are even more bearish than we are today. So see what happens over the weekend and next week on Iranian sanctions. For our full research and analysis and fundamentals report, please visit us at cEntellect.com.